Good afternoon. My name is Stephanie Findlay. I'm the FT's Asia Companies and Markets Editor. Thank you for joining us today for our discussion on closing Asia's financial inclusion gap. Digitization is reshaping Asia. Over the past 2 years, the region has witnessed an explosion in smartphone penetration, social media usage, and e-commerce, with Asia now accounting for nearly 60% of the world's online retail sales. This trend has been driven by a vast youth population of digital natives and supportive government policies to boost the digital economy and infrastructure. Despite this, there are still millions of unbanked adults in the region. What can be done to accelerate financial inclusion and close the digital divide? And who are the new fintech players and social media influencers driving change? This discussion, hosted by the FT in partnership with Home Credit, will bring fresh insights into financial literacy across Asia and observations from business leaders, academics, and experts on how to propel the growth of an inclusive digital economy. Joining me today is Jan Ruzicka, Chief External Affairs Officer at Home Credit Group,
Hello,
Professor
guys.
Sumit Agarwal, Lo Tuk Kwong, Distinguished Professor of Finance at the Business School and a Professor of Economics and Real Estate at the National University of Singapore, Don Cher, founder of Singapore's leading financial blog, SG Budget Babe, and John Pesme, Global Director of Finance in the Finance, Competitiveness, and Innovation Global Practice at World Bank. Thank you so much for joining us today, and let's get into it. So, Jean, the first question to you. What impact has the pandemic had on financial inclusion in Asia?
So, the first element when you talk about financial inclusion is that digital has worked. When you look at the Findex number, which is the regular survey that the World Bank does on access to finance for household and firm, you see a major improvement across the globe, but and also in Asia between 2017 and 2021. So a couple of numbers. Access to accounts, it was stagnant at 68% in South Asia, but already very high. And when you look at EAP, East Asia and Pacific, it increased from 73% to 83%. So 10-point increase between 17 and 21. What you see is that people are using more digital payments. So the number of people in EAP that are using digital payment increased from 57% in 2017 to 76% in 2021. And then you see also a lot of people using digital for the first time during COVID. So a lot of improvement in that respect, not just on access, but also on usage, which is what we need to do more. Example, how much wages, private sector wages are paid using digital, which then benefits people, but also bring volume and therefore helps develop the ecosystem. So in some countries, it's more than 80%. Thailand, China, Malaysia, Mongolia. In others, you have less. So this is where we need to improve. One final message, despite all these aggregate improvements, still a lot of disparities and still a lot of inequalities in access to digital financial services, in particular for women. So we really need to address that, as well as the urban and rural gap. Thank you, Stephanie.
Thank you so much, Jan. Because of just to stay on the pandemic point, because of the pandemic, where did you see kind of significant shifts in behavior in fintech?
So I do believe that we are talking about customers. The customers, as Jean rightly said, they are much more active here in Asia than any else in the world. It's not about early adopters. It's not about Gen Z, but even grandmothers somewhere from Borneo are avid users of e-wallets and fintech solutions. And this was here before COVID for last decade, but COVID boosted it very much. Second, between customers and the companies, we see a lot of joint connections. So we all know about Asian super apps. We know about connection between fintech and e-commerce and retail. Also a role of KOLs like Dawn here that we have here. So we see a lot of these living in, we can even say metaverse, that companies, products, services, and customers are joining together. And then finally, fintech. Here I see that from big buzz that happened here earlier than in Europe and US, pandemic brought us more protection, and rightly so. because there is not only huge positives coming from the fintech, like empowering people, financial inclusion, digital inclusion, but of course there are problems with big data, customer protection, and so on. And I think that it's very, very prudent from all the central banks and regulators across the Asia we all know and talk to, that they are trying to adapt it to this reality, to protect, as we can say in Asia, social harmony.
Thank you. Don, at the kind of consumer level, person to person level, what sort of trends did you see take place over the pandemic?
People are definitely becoming more open to the idea of digital wallets and e-wallets compared to the past where people used to think of it as like a potential scam. People trying to steal your money by asking you to deposit into these e-wallets that you didn't really know whether could be trusted or not. Like, are they, backed up by the government? Are they like insured? Would your money be safe? How are they being custodian and held in trust and all that kind of stuff? There wasn't just this much knowledge or interest prior to that. But the pandemic changed the whole thing, I guess, with a lot of the focus on tech companies who were transforming the world with technology. Then obviously fintech was an area where technology could breach a lot of these gaps. So we started seeing people be more open to going cashless. It got to a point even where, like in some countries, at least in mine, when you go to some store, they would tell you like, oh, we don't do cash payments anymore. You have to use either like a credit card or you have to buy it online. And many a times this would be linked to like, a Google Pay wallet or whatever different digital wallet that you're using. And you would use that to transact through the payment. So at least on that trust level from the consumer side, that has really been like, shifted higher thanks to the pandemic.
Thank you, Sumit. What Don was talking about trust. What government policies are in place in the region to boost the digital economy and infrastructure? Would you say that they're supportive? Is there a country that stands out to you for having interesting laws around this area?
So I'm not sure there's a one size fit all. Different countries have been taking this at strides and depending on their needs. Let's start, say, with China, which has a very top-down approach. They have gone and found two big players and they have said, okay, you are in charge and you will push this idea of super apps. And within these super apps, you will be providing all the facilities in terms of financial applications. And we will make sure we entrust this game. We will make sure the game is played fairly. If we think about another country like India, India has, it's a democracy, it's a messy country, and they had to innovate on many fronts. What they call is the trilogy, the JAM trilogy, which is innovating on creating that unique identity of the individual, then creating bank accounts, and creating 400 million new bank accounts, and then providing the telecommunication network or infrastructure. That has helped India. Indonesia, which is a collection of islands and it's very difficult to kind of manipulate or manage it centrally, there is much more organic. There are these fintech companies like Home Credit that has come in and they've started putting their shops in every little island. Vietnam will be a very different experience because they have kind of tried to learn from the Chinese model. They have tried to think of these super apps, and then they try to bring in all the other players and so all these super apps then essentially end up being the gatekeeper or being the quality control or the person who's providing some kind of assurance to the customer that whatever you're dealing or doing on our super app, we will guarantee you or we will provide you safety and security. Obviously, the central banks in all these countries are also very active. There are routine, news articles, TV things that kind of reiterate that there are bad players and there are good players, and some of these bad players may actually try to hurt you, and it's inevitable. Like any new technology, when banking came in, you could see that when internet came in, you could see the same thing. And we will see over time some of these bad players will just kind of go away because there is no space for them.
Thank you very much. Just on these, I mean, we saw I was in New Delhi as a correspondent, and it was just this rush of companies into India, into serving the unbanked. and it seemed like so much money was being poured in with very little regulation. How do you feel that governments are tackling this issue, perhaps the dark side of this sort of business, when there are so many people that need access, when there are so many companies competing for customers?
So I think that's a legitimate concern, that there is the dark side of fintech. Fintech companies are very good at merging data and banking services, and they can exploit data enormously. And sometimes it will backfire because their models might discriminate naturally for people who have weaker credit or alternative credit, and that could be hurting minorities, that could be hurting women. It's not that the companies intend to do that, but the models are actually discriminating in good credit versus bad credit. And if you don't have full data, then you end up discriminating people who are marginally weaker. Now, what we need to be cognizant as regulators, as industry players, to make sure that we kind of overcome this bias of the inherent model, whereas we can kind of look at aggregate statistics of what is lending, what lending is happening. Regulators can kind of make sure that is not happening, or the companies themselves can regulate, make sure, because if they are in the long-term game of serving that market, of being there, they don't want either the customer to be unhappy or the regulator to come after them. So regularly, what I see around Asia, there is this dialogue that is happening with the fintech companies and their customer base. Are we actually providing they conduct surveys, and they're constantly meeting the regulators, and the regulators are asking, are you serving women? Are you appropriately serving the rural areas? Are you appropriately serving minority communities? This goes back to Jean's point that, look, these are the vulnerable groups and we need to protect them.
Thank you so much. Jan, how do you see this when you're operating in different countries? I mean, what's kind of top of the mind of regulators right now?
I can even add anecdote that we, for years living in Asia, even being Europeans, so everywhere we have a central bank license. So we are very licensed and certified lender, and our competitors throughout the years were coming to us and told us, "Hey guys, it slow you down. Why you want to have a central bank license?" And we told them, "Hey, this is maybe slower but safer game." And this is what I see, and reiterate what Sumit said. I see everywhere. I see standardization in last 5 years. I would even say that what's emerging in Asia is to have two pillars of financial system: banking and non-banking. And we can call non-banking either fintech or consumer finance or digital finance, but it's going to be very much standardized and licensed. It started in China, where now all the big fintechs need CBRC license. Now it's BSP central bank in Philippines. The same. They are pushing payday lenders out of the system. Finally, central bank in Vietnam. The same. They are now preparing fintech regulation, which is at the end consumer finance regulation with digital footprint. So this kind of standardization will help customers. It will standardize the market, and at the end, because again, idea of social harmony, different pieces of financial system, different roles. And we as a non-banking, we are asked exactly what Sumit and Jean said. Serve underserved, serve countryside, women, minorities. That's why we allow you to do risk-based pricing, because these customers are slightly riskier than the banking. That's your role.
Jean, are you also seeing this trend?
Yeah, so I very much agree with the description that was just made, and maybe let me add a couple of elements. The first element is how fast changing is the market. And I think part of it is also we need to understand the market, and we need to let innovation go in the market while at the same time thinking about regulation. And there is that very important and careful balancing act that is going to evolve over time and also depending on the country. But when you think about it, new entrants, new business models, new products, digitalization, end-to-end processes, fast payment, all of this is an absolutely amazing change which has huge benefit. But as Sumit said, you also need to be careful about the dark side. So what we are seeing are very fundamental structural changes in the financial sector that really are challenging regulators, and they need to anticipate. So you see unbundling and rebundling in some cases. So and you see this evolution, what looks like two poles, what we call the barbell structure. So very few large players, the big tech that also provide financial services on one hand, and those ones then you need to look at in terms of data protection, competition, consumer protection, avoiding over indebtedness. And on the other hand, a multiplication of small players that are super innovative and provide products that before did not exist and provide reach. So the issue is to find the balance there and really find smart regulation without stifling innovation, and at the same time making sure that both stability, payment system, and consumer are duly protected. Thank you.
Thank you so much. Those are all great points. Don, when you're talking to people about their budgeting and when they're considering their financial management, what are they looking for in terms of products? And do you feel that they are trustful of these new products that are coming out?
I think the trust depends on the brand. Sometimes when a new brand comes up, if they're backed or founded or they're like a subsidiary of a bigger brand, then it helps to breach that trust level. So I'll give an example. We just had here in Singapore 2 digital banks that were launched this year. One of them was under Grab, and the other one was a joint thing by FairPrice as well as Standard Chartered. So these two are really big and well-known players who have been around for since almost forever. So it was really easy for them to get people to sign up. Of course, I think the incentives offered by the fintech players also do play a role in getting like urging people to sign up right away. But the biggest problem to first overcome is definitely trust and then awareness and then action. The other concern that people usually would look out for typically is the cost. So anything that requires a minimum deposit or a minimum commitment, it would make them think twice. And then they want to know, what do I get out of it? Is there any yield or any kind of returns that I can get if I would put in this amount in that fintech player? So some players have actually made it such that you could earn points or rebates, you could get vouchers and coupons. So that helps to incentivize you to sign up. For the others, they just offer a better, higher interest rate on your savings and deposits. The other one would definitely be the recommendations. So how do people then find out? They want something that's easy, convenient to use, ideally don't need too much of upfront capital. And also at the same time, it's recommended by someone they trust or someone who they follow and they see as a trustworthy person. So that's where like your friends, your family's recommendation, or even KOL recommendations online on social media, that would come into play a part. Although I would have to say the KOL part is a big question mark, because it really depends on who that KOL is. If there's someone who had not been playing or not been active in the finance space, like a beauty KOL now telling you about a finance fintech, you'll be a bit more skeptical and wary. But at the same time, the awareness is a lot more for these players. Whereas if you go straight with a finance KOL like me, the reach may not be as much, but the conversion to the actual sign up would be a lot more. So these are the different factors that's happening in the ecosystem right now. And we really do see the players who are better able to breach all of these factors that I've just raised, they tend to do faster and grow, at least launch a lot faster right from the start.
Thank you so much. Sumit, just on when we're talking about these big markets, India, Indonesia, how have we seen financial services empower people that were previously unbanked? Mentioning women, minorities, or what other groups have we seen have a financial revolution of sorts?
So let me preface that question by thinking, where is fintech coming in? So typically, fintech is trying to find a gap which is between shadow banks and traditional banks. And the major portion of the market they are taking away is from the shadow banks. Paydo, pawn shops, all those kind of things, or informal lending in villages in India. And in that sense, what is happening is they are winning on two fronts. What is the technology is enabling them to do the transaction faster, and they're reducing the transaction fees. Because these shadow banks were charging enormous fees, which undocumented paperwork, And so the paperwork could be misplaced. And then you say, look, you didn't put this as collateral and so on and so forth. And that is more hurting for people who are minorities, uneducated villagers, women, who would then have hard time negotiating with the lender to say, no, this is what we agreed on at earlier on, versus somebody who was in the formal banking sector. They already are fairly educated and can deal with the shadow banks. So the fintech guys are going there, and this is where it is really helping the people who were disadvantaged, especially educationally. People who had very low education, they were dealing with them. Now all they need is a small phone, and that allows them to do a transaction in a small village in Indonesia or Vietnam, if you were in the rural parts of Vietnam, if in the mountains. Now you can just have a fintech guy without having to deal with some muscle man of a of a shadow bank. And even if you're a woman, you're already kind of scared, should I be dealing with these or not? So clearly you see enormous gains. I mean, Jean pointed out some of the statistics earlier, but I think a lot of the statistics will be still an underestimate, because the true estimate that is happening for the minorities is big enough. I actually want it bigger, but that takes time. I mean, obviously, there are risk models that banks, fintechs have to adhere to. They still need data on some of these people to give them access to credit.
Thank you, Jan. Where do you see growth coming from in these countries? Where are you targeting as your high growth areas?
So when I would look into our CRM, I would find there are more than 120 million people. And very big chunks of them are exactly the people we are talking about. Not necessarily only purely unbanked, but still, even now, this year, 2022, 22% of our customers, we are their first point of contact with licensed finance, even today. Then the large majority will be underbanked. Women, youth, Gen Z. It's going to be lower middle class from big cities, and then farmers and people from the villages. And it's exactly what Sumit said. When we do surveys among these customers, previously pawn shops payday lenders with horrendous interest rates without no customer protection. And in our case, logically, we are trying to play a good game. We are a global group, We, of course, don't want to have any problem on the market. And that's why we are nicely reconstituting the landscape, exactly taking from shadow banking, and we can even say the bad guys. And this is how regulators understand us. And I can tell that there is quite good debate in industrial associations around Asia about what is the role of non-banking if we put it more at large, because fintech is more buzzword. But if we think from a regulatory perspective, non-banking sector is currently understood not only as a way how to move unbank and underbank up, but also as a big chunk of consumption and thus ipso facto GDP, and ideally connected with some other products. So to have it not only as a lending, but as a financial backbone of other industries, both retail and e-tail. So these JVs, we do them as well, like everybody else, with Tokopedia, with Lazada, working with Mint, working with Zest Money in India. So this kind of collaboration is something that regulators and more generally political administrations like, because it drives not only B2C business, but also B2B.
And Jean, how do you think regulators are working to keep these services safe, to ensure that as these connections are happening and cross partnerships, that the customers are protected?
So before getting to your question, I think it's really important to emphasize why access to finance is so important. I mean, this is a way to empower people, to help them take control of their life, to help them save, protect themselves against shock, invest, and be able to really be entrepreneurs in some cases. So there is really, financial inclusion is to a large extent a means to an end, but that's really important to re-emphasize that and why we care so much about this. So I think that issue of safety, I mean, one way to think about it is financial literacy. We need to make sure that people understand what kind of products they are using, what are the potential opportunities, but also what are the potential risks. There's a huge challenge on consumer protection, and with the development of digital financial services, you now need to think digital financial protection. So you have issues of fraud, you have issues of indebtedness, and how to make sure that there is no overselling some of credit and indebtedness. You have issues also of data manipulation potentially. I mean, there is a trade-off de facto between providing you my data and then you will provide services that are less expensive. So I think that's really important to make sure that all these elements are properly identified, including in terms of risk for the household. Now, just to add to what was said on regulatory framework, one of the challenge for regulators is that suddenly you have to stop thinking about institution. A bank provides this service to their entities that are all providing the same service, whether they are a bank, a fintech, or something else. So what we call the change in the regulatory parameter is really important and sometimes challenging the regulator. So we see that evolution with a lot of potential and risk. But at the end of the day, the issue of consumer protection is very important. So recently, we disseminated a paper called The Future of Finance, where we are trying to identify those trends, challenges, and opportunities, but also look what does the market tell us, I mean, as diverse in its diversity. And we see those very strong evolution, but in particular, that issue of thinking about services and not more institution and consumer protection are really at the forefront of analysis and recommendation. Thank you, Stephanie.
Thank you so much. I'm just going to interject with a question from the audience on this point, which is, would it not be more profitable for banks to tie up with fintechs to increase client coverage without increasing costs exponentially? Jan, would you like to answer that question?
This is actually happening, as a standard. Why is it so? I think from the beginning of, let's say, non-banking or fintech sector here in Asia, regulators quite prudently disconnected mass market lending to, underbank and deposits to have a more stable system. So basically, companies like us, we are getting money from the market or from our European entities that have deposits. So we are quite standardly working with various banking partners, either from overseas, London, New York, or local. And this is quite appealing, or it used to be quite appealing in the form of bilateral loans or financial bonds, securitization, even before COVID. But now, with, I would say, the vision of sustainability and even ESG, we see that this kind of collaboration is something that even big banks like Citi and Deutsche Bank, we are working with them on this. It's quite appealing because they want to have some touch on the ground, but without the risk of higher NPLs that they don't want to do. So basically, in some form, some kind of joint lending, JFS, joint financial schemes, or even ESG co-lending between the big bank like Deutsche Bank and company like Home Credit. This is something what they like. So either, hey, I give you bilateral loan for XY interest rate, you redistribute it on the market, based on your risk-based pricing, or I will be part of the game. You will be probably as a non-banking first risk taker, but we still would like to have something on our book, or which I think is super interesting, this ESG, both in E-area environment, for example, solar panels, e-motorbikes. Motorbikes is part of Southeast Asia life. And now electric bikes is something that is becoming sexy. And companies like Citi will very happily give you money for it. Solar panels on the roof. But especially, and this is where I see Asian primacy, more social ESG. In Europe, everything is about climate change. It's important topic, but we cannot forget on people, customer. So I see many of the players, both banking and non-banking like us, tractors for farmers, women-led micro businesses, mamas and papas shops. So this is something that I find very appealing, and this is really a novelty especially in South and Southeast Asia. So this collaboration is happening, and I think that more and more big players without touch to retail finance would like to be on the ground, at least indirectly.
Thank you. I think as we're seeing all of these products offered, though, and all of these collaborations, John, how are consumers able to navigate this whole new landscape of banking and digital banking? Is it easy for consumers? Is there a kind of universal guide to what's going on? How do you advise that people navigate this space?
So, Stephanie, for who was the question?
Oh, for Don, sorry. Not
Okay.
For Don, yes.
Right, sorry. I think it's really hard. The thing is that, and Sumit would be the best person to ask on this, we've seen every different country have different regulations and cultural practices and current market scenarios. So every player that goes in have to localize while still keeping to like global trends. So it's like localization, right? And it's really hard for a universal guide to guide people with that. So what it could be seen as trustworthy in one country could actually be really like, is that a scam? Does that really exist? That's too good to be true. Be viewed that way in another country. And people with all those different backgrounds are not going to be appreciative of the same universal guide. And I think that's why it just doesn't exist, which is why like KOLs and influencers do play a strong role, because knowing their own local markets, they'll be able to offer and start to bridge that gap, that knowledge gap. Yeah, but to have one universal guide, like in Asia, earlier on, you guys were talking about how Indonesia is so different. So is Vietnam, so is China, so is India. Every consumer in each of those markets would need a more like localized guide to guide them through. So if anything, it would be really ideal to have the regulators come up with it. But we know that that's not always going to happen, or it will take longer for it to happen. It'll be ideal for the industry players to come up with it, but then consumers will look at it and be like, are they just promoting that guide to promote themselves and their own vested interest to get us on board? Or, as we might say, if no one else is doing it, then the influencers can do it. And that's where then you can actually decide, do you trust the influencer who created this guide? And the good thing is, especially for influencers who are very open to crowdsource ideas, you can actually have many different people create that input, and then the influencer can curate and put in all these, and you get so many different perspectives. But of course, this is something that will naturally develop over time.
Sumit, how is financial literacy developing and being fostered? Are we seeing everyone in these markets going to TikTok for their tips?
No. Clearly, financial literacy is an integral part of the fintech industry. As I said earlier, fintech is trying to come in and take away market share from shadow banks, and those people need to be educated to be able to use financial products. They are also taking away market share from the banks who fell down on the credit ladder, and now they don't know where to go. And so fintech is taking them and holding their hand and bringing them up. Now, fintech, some players at least, are aggressively thinking about financial literacy, okay? And they're pushing the argument that financial literacy is good for business, is good for us, because if we educate our customers, they are more likely to stay with us. I have no doubt that I think some of these customers will graduate from fintech to traditional banking after the fintech players educate them, because the ability for them to access broader products may be better at traditional banking. But fintech players are realizing and recognizing it's good for business. This creates loyalty, it creates reliability, and it also creates kind of some portion of that customers believe them over the long run, and they will actually help them recommend other customers to come in. So I think the idea of financial literacy is not being pushed by traditional banks because they don't see the value in it for them. But the fintech players do see the value, and I see that being pushed by regulators and the players. So I think it's a great thing what I've seen in Asia all over, from Vietnam to Indonesia to Philippines. I mean, home credit is doing a lot of that, which I'm very supportive of.
Thank you so much. Obviously, financial literacy will play a big role in speeding up inclusion, but what more can be done to speed up the growth of an inclusive digital economy, Jean?
So financial education, financial literacy, very important. I think what was said, which is it needs to come from different channels. Messages need to be self-reinforcing, and also not be theoretical, but very practical. How to help really the new customers and the onboarding of these new customers, including at a time, as we said, where there is proliferation of new product, and sometimes it's a bit complicated to understand exactly what are the risks. I think another element that comes on the regulators is transparency. Transparency about what exactly is being proposed. So we've seen that in particular when it comes to payment, transparency on fees is something really, really important. So I mentioned earlier fraud and indebtedness, fees, and understanding exactly what are the fees, what you have to pay. And some of that are mandatory disclosure coming with regulation. Now, one very important element that we see going forward in terms of pushing the envelope, I come back to my point about volume. And these are government to people payment. We really think that scaling up government to people payment is going to create more incentive, but also improve the development is in that digital economy. So then you will have more incentive for the private sector, for merchants to offer digital financial services and progressively push the envelope and make it self-sustaining to a large extent. I mean, you still have countries where you may be able to order online, but you pay cash on delivery because it's too expensive, because the fees on merchant are too high. So we think that idea of really the government scaling up and building on what has been done during the pandemic with the social transfer and getting it to the next level, while paying attention to the three drivers that Sumik mentioned earlier: infrastructure. People need to have access to affordable connectivity, identification, extremely important, and then, of course, on the DFS, making sure that the services are provided. But otherwise, we really think that that element of pushing the market and the government taking action much more systematically is really important going forward. Back to you.
Would anyone like to add on that before I go to one more question, and then we'll turn to audience questions? Jan?
Just very, I would say, practical case study about what Jean is talking about. We as a home credit, we have a retail bank in Kazakhstan, so we are part of banking system there. And what we see now, the Kazakh administration, also with the help of international partners like EBRD and also World Bank, is trying to do exactly like this, to boost digitalization of the country through very single bullet point: government to people money, social security, health insurance paybacks, and so on, salaries from the civil servants to the people. So I do believe that this can be really adopted elsewhere, because this will create speeded, implementation, and also in a same way, because we can believe, presume that this government to people, it's going to be the stable part of the fintech, logically, because the government, customer protection, digital protection, this is something close to their heart. So this can be one of the building blocks also from for other countries.
If I could add on,
Yes,
we do have a global audience here. So one thing that the Singapore government did late last year, early this year, was that in the past, when they gave out free or like cash to the citizens, it used to come in our mailbox. But now they've actually done a $100 credit, and it's through digital means. So during the pandemic, the Singapore government gave every Singapore citizen $100 to support travel and transport operators, go for a hotel staycation, so on and so forth. And people were motivated to learn how to do it, because otherwise, like, they can't claim that $100. In the same vein, when they started pushing out some incentives to help people with inflationary costs, they also did it through digital means. And I think that really helped to improve the perception, the lack of trust, because the people be like, oh, well, even my government is using these kind of channels to give us money. And that helps to overcome that lack of trust that people feel towards these services. Of course, then the question would be, how do the government do it? Would it be on their own systems that they set up? Would it be in partnership with the private sector? And if so, then what would make them choose one player over another? So these are all the different questions that the governments and players have to address.
we've heard reflections on the government side. I'm just wondering, with our current volatile global market, rising Fed rates, we've seen a massive tech rout, which, I mean, we've seen a huge part of digital adoption spurred by companies coming into these markets. What impact do you think the tech route will have on how private companies expand in this space going forward? This is to anyone who. Sumit?
I mean, it's a big question. So I think the role of the government and how the tech companies will be going forward, I think there will be some weeding out to be doing. We have too many players, either in the fintech space or that the role of technology that fintech guys are using. At some point, this has to be transparent. The consumer has to understand why they are, let's say, robo advising. Now, robo advising, is robo advising actually telling you which stocks to buy, or is robo advising just telling you these are the set of menu and now go talk to your advisor and they can guide you further? I think those things have to be sorted out. How much technology will take over and replace human interaction? At some point, customers actually prefer some level of human interaction. COVID actually allowed us to directly or leapfrog that, but customers eventually will want that. And there will be some pullback, I would imagine, going forward on how much technology we want in our life.
So I just add that if you look, and I don't want to name any companies, but especially from BNPL, buy now pay later sector, when we see even absurd valuation last year and now everything fallen down, and it's not only about rates, but it's also stability of the business. And now I'm not talking that it's question only for regulators, but also for companies like us. We want to have a stable market, non-banking or fintech, that it will be trusted. If there will be huge volatility among regulated players, it's not good for anyone. And from this perspective, some form, in a good way, slowing down standardization through, for example, capital adequacies, more prudent GDPR, not only for B2C data, but overall data, KYC, AML. So all these standard tools are actually good, bringing us to standardize, to create trust, and, as Sumit said, little bit clean the market.
A question from the audience now. Does the panel believe that the digital banks will ever make money? Jean?
I think they can make money. So I think they have to think about their business model. But again, we need to be careful with terminology. What do we call digital bank? Is it your classical bank online, or is it a new kind of institution that is providing a new kind of services and then can make their money with different their bottom line may be a bit different. So I think that comes back to my point earlier about thinking institution versus services. So are they deposit taking? In that case, what are the mechanisms? So it's a kind of open-ended question. I think you have new players and new fintech players that are making quite a bit of money, sometimes with very limited margin, but they play on volume, which comes back to my point earlier on the volume. We see that in particular in the payments field. So what we see is that there is a lot of innovation, and I think there are market niches that are identified that did not exist earlier. So, and that's what we need to encourage, provided that it's done in a way that doesn't go against the fundamental of the financial sector in terms of stability, transparency, and consumer protection. Now, I want to come back to one of the questions that you mentioned earlier of the potential for the digital economy. I think one of the big challenges that we are seeing going forward, in particular in countries where the overall level of inclusion has increased, is that those gaps. So the wealth gaps, the gender gap, the rural-urban gap, and this is really something on which we need to invest collectively, public sector, private sector. Some of it is improved data to really be able to understand what's going on. Sometimes it's really being proactive in outreach and also opening the market to new players that may find new ways to reach those populations. But I think there is the overall tide of inclusion, and then there are really some structural gaps that we need to collectively pay much more attention to, including because bringing women into the system is good for your economy. economy, is good socially. So I think that's the part where there is also a very important agenda going forward. Back to you, Stephen.
Thank you so much. Another question for the audience to Sumit. Sumit speaks of financial literacy. How does he account for M-Pesa in Africa?
I mean, look, I think I maybe don't get the question correct, but there will be issues when we think about financial literacy and the reach of financial literacy, okay, and the number of players. Now, M-Pesa has empowered lots of people in Africa in their ability and access to finance. Now, that's not a perfect model, and that may not be the only model. And if there were more players, actually, that may actually regulate, or they may be self-regulating because of that, and they would push more to the literacy argument. But right now, the reason is they don't need to, because they are the only game in town.
Thank you so much. Just we're in the final minutes of this session. If everybody could have some closing remarks, we'll start with Don. What do you see being one of the more big factors in driving digital inclusion?
Sorry, there was some background noise. Could you repeat the question?
Okay. Yes, what do you see driving financial inclusion?
I think awareness is one, and then access to resources would be another. And then the last one would definitely be peer-to-peer support from friends, family, and people around you. So in the past, like if we look back a decade ago, there were very little players, be it the traditional banks or the tech firms, or even on consumer side, who were touching on financial literacy. It used to be a conversation reserved to the people who have made it and not to the people who need it most. But that has slowly changed and evolved over the years. People are now coming in to share about their own personal journey. Money is no longer a taboo topic to talk about in Asia, unlike what it has always been. In the past, if you used to ask someone or talk about salary, people would say that's so rude, but that's changing. And this sharing of knowledge is really the first step to helping people bridge the gap. And the other one would then be directing them to the right place for resources or having the resources in place. So if someone wants to start a business right now, where do they go to lend money if they don't get accepted by the traditional banks? Do they know of these alternatives that the fintech players are offering? Or are they only thinking of, oh, well, it's either going to be the traditional banks or I have to borrow from like loan sharks or pawn my jewelry? If they're stuck in that knowledge gap and no one comes in to tell them, hey, did you know there's actually this other platform or place that you could go to where even if you don't have a prior credit report or history, they can assess you and then still loan you money that you need to go and start your business and get yourself out of the poverty cycle. So these are really starting to change and coming in. And I think here in Asia, we're really seeing that, which makes me even more confident that Asia is going to be the place to watch for fintech growth, because there's just so many challenges to overcome. And it's just beautiful how all the players are coming together with that motivation to, yes, these are the problem. We're not going to let the problem daunt us. We'll come in, offer new solutions to this problem and in innovative ways. And bit by bit, we're moving forward.
Thank you, Jan. On the final note, what do you think is key towards financial inclusion?
I think to use digital not only for spread the money, but also spread the knowledge. Before COVID, companies all around Asia, they were, printing textbooks, going to villages, the same of our government and NGOs. But now there's nothing bad about TikTok. I love doing financial literacy on a TikTok. You need to be in a conversation with KOLs like Dawn. You need to work with digital NGOs. So let's use it proactively, not only to disseminate money and products and services, but also to disseminate knowledge. This is I would say, key ingredient to have a good recipe at the end.
Well, thank you so much. That concludes our session. Thank you, everyone who watched and who joined us today for this session with the FT and Home Credit. Have a wonderful day.
Thank you.